Hey everyone, it's Dale here. Thanks so much for coming to the webinar. Today we'll be talking about intraday trading with volume profile and order flow. But I'm going to show you this trading method. I apply this to currency markets as well as indices. You can apply this to any other market you guys like to trade, but my experience lies with the currencies and also with the indices, mainly the ES and the NQ. Today's focus will be on trade entries. We won't have time to cover the position management, money management or psychology, because I want to teach you one thing properly so you guys are confident and you can start using it right away. Alright, so trade entries with volume profile and order flow. So today we'll talk about two things and combine them. We'll talk about volume profile, which will tell us where to trade, and we'll also cover order flow, which will tell us when to trade, the timing. In the volume profile part, I'll show you some volume profile basics, then how to use volume profile to find a good support and resistance zones, and I'll teach you one concrete setup from A to Z. Then we'll move to the order flow. There I'll show you three setups to confirm your trade entry or to time your trade entry. And the setups are called absorption, delta, and big orders. A little bit about me before we get started. I'm Dale. I started to trade in 2008. I trade mainly with volume profile, order flow, VWAP, and I do intraday trading as well as swing trading. 10 years ago, I started a website, traderdale.com, where I teach traders how to trade like I do. I'm also pretty active on YouTube. I have over 1,300 videos there, so you are very welcome to check them out. Also, I wrote a couple of books about trading. It's the volume profile book, order flow, about VWAP, book about stock investing, and about prop firm trading. Now, speaking of which, I have a little gift for you for attending the webinar. Even if you guys are watching this from a recording, you can get the gift as well. And the thing is that you can choose any of the books here. And if you guys are in the US, I will ship it over for free. I'll even cover the shipping. So if you guys go to my website, which is traderdale.com, and if you click this button in the menu at the top, it'll bring you to this page, and on this page you can order your copy. There's not really any catch included, just order the book. I'll cover the shipping and just enjoy it. Let me know how you like it. Alright, so let's move on. So today we'll talk about the volume profile, that's the where, and order flow, that's the when. Let me demonstrate what we will do on this little example here. So first, we want to find zones where to trade. And for that, we want to use a volume profile, right? So this left part of this picture that shows the volume profile, and we'll be looking for zones, important zones, where to trade with order flow. Once we've identified those zones, then we will move into the order flow part, and there we'll look for confirmation, whether to trade in those zones or no. Okay, so this is how we are going to do it. And let's start with some volume profile basics. So a volume profile is a histogram which shows volume at price. You can look, for example, like this volume profile right there. And the main idea behind the volume profile is that we are tracking the big volumes or the big trading institutions. Simply put, the big guys who move and manipulate the markets. What is most important in every volume profile are heavy volume zones, right? A heavy volume zone is simply put where the histogram is wide, right? So that means that in this case, this would be the most important place in the volume profile because this is where the volume profile is the widest. The reason that those heavy volume zones are that important is that heavy volumes, they represent strong support and resistance zones. I have a couple of volume profile strategies that I apply. different strategies for when the market is trending, different strategy when the market goes sideways. But the core of all my volume profile strategies is this. Heavy volumes are strong support and resistance zones, right? And the core of what I do is I trade pullbacks to untested, that's important, untested heavy volume zones. So if you take a look at this picture here, then I take, for example, this heavy volume zone, mark it on the chart, on a 30-minute chart, and I wait for the pullback. I wait for the price to first move away from that heavy volume zone and then make it back. And when it hits that heavy volume zone, that's where I enter my trade. In this case, this would be short. And that's how I do it. Pullbacks to heavy volume zones. Always on 30-minute time frame. And important thing, first test only. Okay, this is the first test. That's where the price hit that heavy volume zone after the pullback for the first time. I don't trade second tests. Okay, so this is the core of what I do with volume profile. This is how I use it. Now, what I want to do is I want to teach you one setup. I would say my most favorite setup, and you'll be able to see it on the charts quite often. The setup is called the trend setup. I call it the trend setup because you trade it when there's a trend. So step number one, you need to be on a 30-minute time frame, right? Then you want to look for a significant trend like this one, right? This is a strong uptrend. And then you use volume profile to check the volume distribution in that trend. You want to see how volumes looked in that trend. Now, the volume profile that I'm using is my custom-made volume profile, which you can move around the chart, look into specific areas you're interested in. That's why the volume profile is called flexible volume profile, because you can move it around. I would say it's better than, for example, the daily profiles, because the daily profiles only show you how volumes are distributed through the given day. But the flexible profile allows you to look, for example, just in the trend area. That's very important, right? Anyways, you check the volume distribution in the trend, and what you want to see there is you want to see a significant volume cluster, one or more. In this case, there's a heavy volume cluster in here that definitely stands out. So in this case, that would be the one to trade from. And then you trade pullbacks from it. So you mark it on your chart, you mark that heavy volume cluster, and then wait for the pullback. When the price hits that heavy volume zone, that's where you enter your trade. In this case, it would be a long, because this is a long trade scenario, because we are looking at an uptrend, right? That's why we are trading long, okay? So yeah, you trade pullbacks from the volume cluster, and that's it. That's the whole trend setup. This is how it goes. Logic behind it is that this heavy volume zone represents place where buyers were active, where they were adding to their long positions as the market was moving upwards. You can see that on the volume profile, right? Because heavy volumes means big players jumping in, right? So those are the big players in that volume cluster. And when the price reaches that volume cluster, the big players defend that place because it's important for them, right? It was important for them in the past, and it's likely to be important for them now as well. That's why the price reacts, because they defend that place. So yeah, that's the trend setup. Now let me show you a couple of examples. Here is a short trade example. You can at first glance identify that we have a strong downtrend here, right? So you use the volume profile to look into that downtrend. You are interested in significant volume zones that clearly stand out. If you look at the chart, you should be able to spot them right away. Don't just look for volume clusters, small ones, just to have a trade. No, you just want to look for volume clusters that strike you in the eye at first sight. So in this case, that would be this volume cluster and this volume cluster. Definitely the strongest volume clusters on this chart. you mark them and you wait for pullbacks. So you wait until the price moves away from the volume cluster and then makes it back, hits that level which you marked, and this is first short, then the price makes pullback to the second volume cluster, and there's the second short, right? Short number 1, short number 2. Now, people often ask me how long is a level valid, like how long do we wait until we discard the level? Now, in my experience, markets have great memory, and even if a level is week old or 2 weeks old, even a month old, I still trade it. Reason is, as I said, markets have great memory, and sometimes I have feeling that the older the level, the better the reaction. I don't really have any data on this. I didn't do a proper test whether this is right or no, but I have feeling that sometimes the old levels work just, like a charm. So yeah, based on my experience, this is how it works. Markets have great memory, and I have no problems trading those intraday levels, which are even a month old. If it's beyond that, then it would need to be a very strong level to trade it. But if it's like a level like, for example, those, then I wouldn't have problem waiting a couple of weeks to trade them. Anyways, let me give you one more example here of the trend setup. Again, we are looking at a downtrend, and you use ideally the flexible volume profile to look only into the volumes in that trend, right? So in here, we have 3 volume clusters that stand out. First one, there's the second one, and there's the third one. So let's start with the lowest one. Price moves away from the volume cluster, then makes pullback, hits that level, short from there, easy, right? Now, about the second one, this one. This is a volume cluster which I would skip. I wouldn't trade this because it's just too wide. I would skip this. As you can see, in the end, the price does make a nice reaction to it, but it would be hard for me to place the short trade entry there. So I would skip this one. Now, let's focus on the third one, on this one. So in here, heavy volumes are formed in this little rotation. The price moves away and then makes pullback in here. So it would actually be short from this place. That's the first test of those volumes formed in here, right? If you are confident that this is a trend and that it's okay to trade the trend setup, then you can take the trade. If you are not confident that this is a strong downtrend, because at this point it might not be that clear, then you can skip a trade like this. I would say the clearest trade of all those was this one, short from there. This would be the best trade from this example, right? So yeah, so that's the trend setup. All right, so on to the next part, order flow. That's when we talk about the timing, about the when. So after you identified the strong support or resistance zone with volume profile and the price made it back to that zone, then you want to time your trade entry with order flow. And we'll use one of the 3 setups, which I'll show you in detail. It's absorption, delta, and big orders. If there is any of those 3 setups confirming your trade entry, that's when you pull the trigger. So let's get to it. Let's start with the absorption setup. Oh, one more thing before that. I just wanted to tell you one thing about the visuals of the order flow that I'm using. On this screen, you can see 2 visual settings. I'm using the one on the left, the colored one. The reason is that the colors allow me to read the order flow better and to understand quickly what's going on. Red color means that sellers were in control in that part of the footprint. If it's green, then it were buyers, right? So at first glance, I can tell which sell was dominated by buyers, which sell was dominated by sellers. right? Also, what it does is, as you can notice, when the volumes are heavier, it's in darker shade. So the shades help me to understand where heavy volume activity was and where wasn't. So in here, for example, this was a place, as you can see, the shade of the colors is darker, and I can immediately tell that heavy volumes were traded there without reading all the numbers, because order flow shouldn't be about reading the numbers, even though it's full of them. If you compare it, for example, with this part of the chart, then the color, the red color, is just light. That means that the volumes were not so heavy and possibly not so important. So I can at first glance tell who's in control and where the heavy volumes are. That's very, very important. This layout, on the other hand, doesn't show you that, and it only shows you numbers. And unless you read all of them, you can't really make a head or tail of it, and it's hard to understand. It takes time. So not too practical. You can obviously switch between those two, but the one on the left is the one that I prefer. Okay, on to the absorption setup. So, absorption. First thing, I do this on a 5-minute chart. All those order flow confirmations are on a 5-minute footprint chart. What I want to see is price reaching a strong support or resistance zone. So imagine that in this case, we have a strong resistance zone somewhere in here. Resistance which we found using the volume profile setup, the one I showed you, the trend setup, right? By the way, you can use any other setup you guys like to identify the strong support or resistance zone. If you don't like using volume profile, you can use price action, you can use smart money methods, you can use VWAP, you can use whatever you guys like. Daily highs, daily lows, breakouts, whatever, to find strong support and resistance zones, whatever works for you, whatever you like. But when the price reaches that zone, that's when you switch to order flow and you want to see confirmation to enter your trade. So in this case, the price went up and hit that resistance zone. What you want to see inside that resistance zone, and it's important that it's inside that resistance zone, you want to see abnormally heavy volumes appear both at bid and ask. So bid is at the left side of the footprint, ask is the right side of the footprint, and you want to see heavy volumes on both. That's important that it's on both, right? The heavy volumes could appear in one cell or couple of adjacent cells. So it could be, for example, those three. See, there were heavy volumes at bid and at ask in all those three cells. So it could look like this, or it could be just one huge heavy volume cell. So what the price does when it hits that resistance, let me draw the resistance again, it stops to move. See, it moves up, but here in the resistance, it stops to move, and that means that pressure is being absorbed. So in this case, buyers were pushing the price up, the price reached that resistance zone, and buyers were pushing the price up. Those are aggressive buyers here at ask. But at the same time, sellers started to sell because the price reached resistance, right? So sellers are selling. That's why the price stops, because sellers selling, buyers are buying, the price stops, and heavy volumes are being accumulated there, right? That's why we see heavy volumes both at bid and ask, because it's buyers as well as sellers there. That's a confirmation for you that sellers are jumping in and you go short, right? You enter your trade. That's the confirmation. So in short, you're looking for heavy volumes both at bid and ask at your support or resistance level. That's your absorption. Now, people often ask me, what's abnormally heavy volume? Well, there is a simple rule of thumb, and the thing is that you just take a look at the chart and take a look at the average volume in the cells, right? For example, in this footprint, 42 contracts, 86, 139, 103, 79, 137. And now compare those numbers to what you see in here, especially in this cell, right? This is abnormally a huge volume compared to that. So this is how you can tell. Also, what my software does, and what I already talked about, is it makes the cells darker, the cells with heavy volumes. So you can tell by looking at the colors as well, right? You know, the thing is that different instruments and also different sessions, they have different average volumes. So I can't really tell you that, for example, 500 contracts is a big order, because it depends. Is it in Asian session? Is it in the Euro and US overlap? Like, in which session it formed? Also, which instrument? Like, 500 could be good on the Euro, but not so much on the ES. You know, so different instruments, different volumes, also different sessions, different typical volumes. So the best way how to go about this is either learn what the normal is, which you will in time, or just compare to what you see on the chart, what was normal before, and compare it to what you are seeing now. If it's multiple the number, then you're looking at abnormally heavy volume, and that's the confirmation, right? So let's move on to a couple of examples to make this absorption setup clear. So imagine that we have a resistance in here. Again, it could be volume profile resistance or any other resistance which you found using your tools, your setups. We have a resistance, price moves towards it, hits that resistance, and what do we have here? We have heavy volumes, especially in this cell and also in this cell. They're very close to each other, almost adjacent. Well, also we have this cell, also heavy volumes in here. So we can definitely tell that somebody big is jumping in here. Not just the buyers who are pushing the price up, but also sellers, right? Because we see heavy volumes both at bid and at ask. This is what we want to see. This is absorption, right? So once you see this, you pull the trigger. Immediately after you notice unusually heavy volumes, that's when you pull the trigger, right? So yeah, that's how the absorption worked in here. Let me give you one more example. This is a long trade example. Let me draw a support here. Let's say that we use the trend setup which I showed you to identify this support here, and the price makes it towards the level, hits it for the first time. Remember, we are trading only at the first hits, and unusually volumes start to show up. See this cell right here. Also this cell, right? If you compare the volumes to what you see here, then yeah, it's way more. So this is unusually heavy volumes, and you see that buyers are jumping in and they are fighting with the sellers. Because what happens here is that sellers are pushing the price downwards, they are selling, but when the price hits the support, buyers start buying, and they are buying everything that the sellers have to sell. That's why the price stops to move. And that's the absorption. Selling pressure is being absorbed. When you see this, you go long. Now, one more thing to point out is that this absorption, those heavy volumes, they really need to show in that support or resistance zone. If you spot this anywhere else on the chart, let's say, for example, this is a cell with heavy volumes, then it doesn't really mean a thing unless it shows at support or resistance zone. If it's anywhere else on the chart, on a random place on the chart, then it's just a noise. Ignore it, okay? That's not an absorption, it's not a valid setup. It's only valid if it forms in a support or resistance zone which you identified. So yeah, absorption, that's the confirmation that the players, the other market players, the big players, do see your support and resistance zone. They are trading it, they are fighting over it, And that's why you guys want to pull the trigger, because you want to follow the big guys. You want to follow what they do. That's why we use volume profile. That's why we use order flow. That's why we use VWAP, which is also volume based, because it follows the big guys, right? That's what I try to do. Follow the big guys. They move and manipulate the market, so follow them. All right, setup number 2, delta. What delta means is it is a difference between ask minus bid. So if you take, for example, this footprint right here at the top and do sum of all the volumes at ask and deduct the sum of the volumes at bid, then you get delta. In this case, in this footprint, delta is negative, right? The delta shows below the footprint. That's how my software prints it. I think this is pretty much standard, but in my software, delta is below each footprint. So here we have negative delta. Negative delta means that in that footprint, aggressive sellers were dominating. If we have a positive delta, like in here, 531, then it means that in this footprint, aggressive buyers were dominating, right? This is essentially what delta is telling us. And what this setup is all about, you want to look for a change in delta around support or resistance zones. So let me do a little drawing again. Let me draw a resistance somewhere in here, for example. And when the price reaches that resistance, you see change in delta. Because this is resistance, you want to see negative delta. You want to see aggressive sellers, right? Aggressive sellers dominating. So when the price is rising, the delta is positive. This is as it should be. When the price is rising, buyers are more aggressive and delta is positive. So things are as they should be. But the price reaches the resistance zone and sellers jump in, aggressive sellers. That's when you pull the trigger, right? You can pull the trigger when this footprint closes. So in here, it would be short from this place, right? So you want to see change in delta. Let me show you a couple of examples to make this clearer. So again, imagine that we have a strong support here and the price makes it towards the support. This is where it hits the support for the first time. And as the price is dropping, delta is negative, everything is as it should be, everything's normal. Even in here, delta is negative, but then positive delta. In this footprint, delta is positive. That means buyers are jumping in, right? They see this support, they want to trade this, and they start to jump in. That's when you pull the trigger, that's when you go long, right? And that's the confirmation. Now, again, you need to see the change in delta only in support or resistance zones. If it happens anywhere else on the chart, it's just a noise, ignore it. You need to see this in that support or resistance zone. A lot of people, when they first start trading with order flow, they are overwhelmed because they see all the numbers and all the details, and they start looking for the setups everywhere on the chart, which obviously leads to losses, right? You really need to use the order flow only around the support or resistance zones, and then it's super useful, but don't start to chase trades and look for the setups just anywhere on random places, right? That doesn't work. Well, at least not for me. All right, back to the delta examples. Let me give you one more. Let me draw a support here, and the price reaches that support. This is where it hits the support for the first time. Delta is still negative, but the next footprint, positive delta, right? This footprint. One thing to notice here is that this is a bearish footprint. The next one as well. So that means the price goes down, but delta, see, delta is positive. So this is a little divergence. It's called divergence because the price goes down delta goes up. And what the price usually does, it follows delta, right? So this is what you want to see. You want to see change in delta, even though the price is still dropping. Never mind. I like this even more, actually, when the price is dropping and see delta rising. That's divergence, that's great. And yeah, change in delta, this footprint closes, boom, enter your long, right? Then as you can see, aggressive buyers are dominating and pushing the price up. Delta's positive all the way up. So that's the delta. Now let's talk about the third setup to confirm your trade, and that's big orders. The way I use this is that I use a layout like this. As you can see, the footprints have zeros in them. Most of the footprints have just zeros. That doesn't mean that nobody was trading it, but I'm using a filter. It filters out the noise. It filters out the small orders and only shows the big orders. See? The big orders. My software can do that. I'm pretty sure NinjaTrader software can do that as well. And I simply set the settings to show trades bigger than X contracts to filter out the noise. Again, as I said before, different markets mean different typical volumes. So this is the setting which I'm currently using. For the ES, minimal trade size, 300 contracts. That means that this layout will only show trades which are bigger than 300 contracts. Single trades, not iceberg orders, but if a single trade is bigger than 300 contracts, then it will show up here, right? For the NQ, the min trade size is 50. For the Euro futures, the minimal trade size is 70. Now, the typical volume changes over time. I remember a couple of years back, I was using different numbers here, but this is what I'm currently using. And the idea behind this is that price reached a strong support or resistance zone. And when it did so, somebody big wanted to trade it alongside you. Right? Somebody big saw that support or resistance, they were waiting there with their limit order or maybe with market order, who knows, but they entered a trade. Somebody big entered a trade, and you can see that with the trade filter. All the noise is out of the chart and you only see the big guys, the big orders. So when the price hits a strong support or resistance zone, you enter your trade. In this case, what we have is, let's imagine we have a support here, and the price makes it to that support for the first time. It moves towards it, forms 500 contracts here, but it doesn't interest us because we want to see a big order inside that support zone. So this is not really relevant. But when the footprint shows this, or this, whichever comes first, you enter the long trade because somebody big just entered the market at your support zone, right? So it's long from there. Now, it doesn't matter if the big order shows at bid or ask. It doesn't matter because it could be market order or it could be a limit order. You can't really tell. What is sufficient is we see one massive order, somebody big jumped in, and if it's around your support or resistance, then you enter the trade. Now, as I said, this doesn't work with iceberg orders because iceberg orders are orders that are split in multiple smaller orders, so we can't identify the big order. That's what the big guys do. They use iceberg orders. But if they don't, if they just trade with big orders like those, we can track that. We can see that they're reacting to our support or resistance zone, and we enter our trade. That's our confirmation. Okay? So this is how the big orders go. Let me give you a couple of examples to make this clearer. And let's imagine that we have a support here. The price makes it to the support. By the way, there is one exception here with those charts. Usually I'm using 5-minute charts for all those confirmations. In this case, with those kind of charts, I'm using 5-minute charts as well as 30-minute footprint charts. Okay? So back to the example. The price drops towards the support and we have at first nothing, but then the next footprint we have heavy volumes, big orders. both at bid and ask. It's not important that it's bid as well as ask. One of them would be sufficient to enter the trade, right? Either bid or ask, it doesn't matter. If you see big order, pull the trigger. Now, one more example. Imagine that we have a support zone somewhere in here and price moves towards it. We are not interested in this because this didn't occur at our support. We are not interested in this because this happened just, anywhere on the chart. So we do nothing, we wait. But when the price reaches our support zone and big orders appear here, that's interesting, right? That's when you pull the trigger. And again, doesn't matter if it's bid or ask. In this case, it's both, but could be just one to enter your trade. Okay, because somebody big just entered at the support. So follow him, follow that big guy. All right, let's do a little recap of the whole process here, okay? So the first thing, start with volume profile to find the where to trade. So the trend setup, which I showed you, goes like this. You look for a significant trend and identify significant volume cluster or volume clusters in that trend. Then you mark this zone, the whole zone where the heavy volumes are traded, you mark it on the chart and then wait for pullback. First, the price needs to go away from that heavy volume zone, then make the pullback. When the price hits this zone for the first time, that's when you want to use order flow, the timing, the when, right? Either of those three setups, absorption or delta or big orders. Absorption is heavy volumes both at bid and at ask. Delta is aggressive buyers versus aggressive sellers. You need to see a change in the delta. And the big orders is that filtered chart where you see only the big orders. If you see any of those in this area, then you enter the trade. If you see 2 or 3 of those at the same time, even better, but one is enough, okay? When you see this, that's when you enter the trade. In this case, because we were looking at an uptrend, this was a long trade scenario. So in this case, it's long from the place where the confirmation came from. Okay. Now, what I want to do now is show you one example how it went from A to Z. This is a real trade from our members area, which we traded with our members of our trading course. And this is where we started on the Euro futures chart. This is a 30-minute chart of the Euro futures. And here we see a downtrend. So we used the flexible volume profile to look into the downtrend and identify heavy volume zones. There was this one and also this one. Now I want to focus on the one which was higher, which I already marked as a resistance here. The price moved away from it and then hit it for the first time in here. All right, so at this place, you use the order flow to see if you get a confirmation to enter the short. So let me switch over to the next slide where I will show you what the footprint chart looked like when it hit the resistance, right? This resistance zone and this resistance zone, that's the resistance zone from the previous slide. This one, right? That's the same zone, only it's zoomed in so we can see the details on the order flow. So let's start with the picture on the left. That's a 5-minute footprint chart. It's a bid-ask chart. The price moves up towards that resistance. And when it hits the resistance, you can see this. That's heavy volumes, both at bid and ask at the resistance. So that's the setup number 1, absorption. Market is absorbing the buying pressure. Buyers are pushing the price up, but sellers are selling. Price stops, heavy volumes are traded, and buying pressure is being absorbed. Once you see this, you can enter the trade. But there was more to this. There was also the delta confirmation. Take a look at the deltas. When the price was rising, we had positive deltas, as it should be. But then, weird thing happened. We have negative delta, even though this candle was massively bullish. So sellers were dominating in this candle, quite possibly in this part, but sellers were dominating. That's confirmation by delta. Also the next footprint, see, again, negative delta. So we see that aggressive sellers are actually jumping in and they are dominating. That's confirmation by delta, that's the setup number 2. Now let's move to this chart here, and let's see what the footprint shows when the price hits that resistance. This is where the price hit that resistance. At first nothing happened, but the next footprint shows big orders. Somebody big just jumped in at that resistance, right? So that's the confirmation by big order. So in this case, you can see this was just a perfect trade because we had all 3 confirmations: absorption, delta, and big order. As I said before, you don't need to see all 3. If you do, it's a bingo, but even one, if it's a good level, then just one is good enough for me. If the level is okay, I'm not sure about it, then I would prefer more confirmations, maybe 2 or even 3, right? So yeah, this is how the trade went. As you can see, after it hit the resistance, there was this strong sell-off. So yeah, worked like a charm, like it should. Now, what I have for you here is a little extra tip. And the extra tip is about merging cells. What it does is it turns footprints that look messy and complex like this into something which is easy to read, like this. It's a simple thing. What you do is just go to settings, and my software calls this tick aggregation. I think Ninja software calls it merging cells. And what it does is, if you set it, for example, to 20, if this was 20 here, then what it would do is take 20 cells and turn it into 1, thus making it easier to read, way easier to read and understand what's going on. Because truth be told, I wouldn't be able to read this and tell what's going on in here. This is like typical, for example, if you open up the NQ chart. It looks like this. It's a mess. You can't tell what's going on. But if you use the merging cells, then you turn it into this, which is suddenly easier to read. The values that I'm using is for Euro futures is tick aggregation of 2. That means that I turn 2 cells into 1. For the ES, it's the same. And for the NQ, which is way more volatile, I use 10 to 20, which means big chunk turns into 1. As a little extra bonus, this will make this way less demanding on your computer. So the order flow will work way faster because it has less data, right? So yeah, that's the little trick. I would strongly encourage you to use it because order flow needs to be made simple, right? Simple to read, simple to understand. Don't make things complex where they don't need to be complex. Alright guys, so if you liked what I showed you today, if you want to learn more, then visit my website, which is traderdale.com. There's a ton of videos there. I do regular market analysis. Also, I post articles. And if you really want to dig deep, if you want to learn what I do from A to Z, exactly my trading strategies, and also if you want to get your hands on my custom-made trading tools, then you want to check out the trading course and the tools that I provide on my website. And this brings me to the special offer which I have for you as a special thanks for staying until the end of the webinar. If you go to my website, traderdale.com, and if you click this button, trading course and tools, it'll bring you to a page which looks like this. And what I offer here are my 4 packs the volume profile pack, order flow pack, VWAP pack, and smart money pack. All those packs include my strategies. So there's essentially a video course, like 10 to 15 hour long video course about how exactly I use the strategies, all the rules, everything you need to know from A to Z. Also, the software that you are going to need, whether it's volume profile, order flow, or VWAP. By the way, the order flow course includes not just the order flow software, but also the volume profile software, so you can use them together. So anyways, you can choose from those courses here, or here's the special deal for you. You can get the combo. That means you can get all 4 packs together in one massive bundle for $6.97. This is the cheapest I've ever sold this for. So if you guys are interested, now's your chance, right? And this will be valid until the end of the month. If you want to check out what our members have to say about what I do, about the indicators, about the surveys, about the courses, then check out the Trustpilot side or the Forex Peace Army side. There's hundreds of reviews there. I need to say that we have the highest rating on both those sides, the 5-star rating. So yeah, it seems like people like what we do there. Anyways, at this point, I like to answer questions you guys had in the chat. There's tons of them. And what I'll do is I'll do a separate video because there's a ton of questions. I'll do a separate video and I promise that I'll answer all the questions you guys had in that video. So if you guys go to my YouTube channel, this is the address, or just search for Trader Dale on YouTube. Subscribe so you don't miss the video. Probably next week I'll publish the video where I answer all the questions you guys had during the webinar. All right, if you have any more questions, then contact me at this email address, contact@traderdale.com. I'll be happy to help. I usually answer within 12 hours. All right, so that's about that, and let me now go to the questions.